Hey traders, this is David Niyi. Welcome back to my channel where I teach you simple basics you need to know in trading. So in today's video, I'm going to be talking about trend. What is the trend in the market, types of market trend, and how to identify them. I would love you to give me a few minutes of your time for me to illustrate what I'm trying to explain to you. What is a trend? A trend is the general direction in which a currency price or an instrument price is moving over a period of time. There are three market directions I'll be sharing with you. The first one is an uptrend. An uptrend is when market form series of higher highs and higher low. What I mean by that is when the market or the price of a particular instrument or currency forms series of higher low, higher high, higher low, higher high, higher low, higher high. So basically this is what it means when you hear the word higher highs or higher low, formation of higher highs or higher low. The logic behind this movement or the formation of higher highs and higher lows is just the activities of much buyers than the sellers create this kind of move, forming an uptrend, which means the price of the instrument or the currency is heading up, is increasing. I hope you get me. So let me show you some example on the chart. Earlier I mentioned when you are looking for an uptrend, you have to look out for higher highs and higher lows from the definition I gave the other time. We have an example here. The price of this instrument was heading downward before. Then it got to this price. The buyers came in, pushed the market. Then it broke this previous high. Let me mark it out. This previous high. It broke this previous high. Then after breaking it, the market continued to move higher, then got to this price here. Then came down to form a higher low. This right here. Higher low. After the price formed an higher low, it broke the previous high. This was the previous high. It broke the previous high, then created a new higher high, which is this guy here. Then that high came down from a higher low also. So it goes like that. The logic behind it, you can see that the color of the candles, which represents the buyer, is much more than the red candle, which represents the sellers. I hope you get me. So it shows that the buyers are the one controlling the market currently. So the price of the instrument is increasing. To identify an uptrend, you mark out the structure. What I mean by marking out the structure is, let me delete it, control V. What I mean by that is, you take your instrument, which is the trend line, then you mark out the previous high. This was our high, then it got broken, so the market keep going up. Then you mark out higher high. After the break of the high, you mark it out. Okay. Then you mark that lower high that was formed also, you mark it out. Then the high that was formed by the lower low, you mark it out also. The advantage of marking it out helps you to visualize the direction of the market, which trend you are. Because once we break through this former high, you still know that, okay, we are still in an uptrend. But once we don't break, you can hold back to see, okay, if we are going to break this low to maybe change direction. I hope you get me. So that is for an uptrend. So the next type of trend I'll be sharing with you is the downtrend. I'll get this one cleaned up. Second one, downtrend. What a downtrend means is when the market forms series of lower highs and lower low. This is what I mean by that. Let's say you have the market of or the price of an instrument edging up before, then suddenly started going down, creating lower low, lower high, lower low, lower high, lower low, lower high. When you see this kind of formation in the market, it indicates a downtrend, formation of lower highs and lower lows. And the basic logic behind it is much activities of sellers than the buyers. The sellers are in control of the market. They are selling that instrument. You understand me? Let me also show you an example on the chart. Okay, this is an example of a downtrend. Market was heading up before, then it dropped down, created a lower low which was lower than the previous low. Let me mark that out. This was our last low. Then the market came, created a lower low, then afterward created a lower high, created a lower low, and again created a lower high, created a lower low also here, a lower high also here, and again a lower low here, and a lower high here. So you can see from what I marked out, showing you the lower high and the lower lows formation. This was our previous low. The market broke it, created a lower low, couldn't go up to take out the former high, created a lower high, created a lower low, created a lower. You might be wondering why I marked this place out as my lower low, and why I didn't mark this place out. So this is the reason why I marked it out. When we see the last low, this is the last low, you can see that the market broke through it and created this low, then went back to the last low, retested on it, and could not break above the previous low. So just giving some fakers. Was giving a red candle, a green candle, red candle, green candle, red candle. So it's showing, and if you go to the higher time frame, they are all going to be a week. So that is why I marked this out as my lower low, like I did for the first type of trend I explained, how to identify them. You mark the structure out. So let's do that together here. You pick our trend line, then you mark out, this was the previous low, you mark it out. Then when the market broke through it, okay, created a lower low, you also mark that lower low out. Then you mark the lower high also, you mark it out. Then it goes like that. The lower low, you mark it out also. Then you mark out the lower high. Just keep on doing this for the remaining. This was our lower high, and this is the lower low again. Then our lower high here. Again, lower low here. And a lower high here. So, and it goes like that. You can see from the marking out of the structure, it gave us clear view of where the market is trending towards. Lower high, lower low, showing that it's going down. And you can see from the movement that the colors of the candle are red, which signifies the sellers, showing the power of the sellers. That is for a downtrend. Last type of trend I'll be sharing with you is the range. Or you can call it choppy movement. In this type of movement, the highs and the low are always at the same level. They are equal. This is the high, this is the low, this is the low, this is the high, this is the low, this is the high, this is the low, this is the high, this is the low. This is what you tend to see, this kind of direction. The price will be at same level. And from the definition of choppy, it's like a zigzag move. You know, when a chef chops carrots, what type of movement does the hand skill move? Like up and down. The upward movement of the knife is always same, and the downward movement is always same. So that is exactly what it means when they call it choppy. Here we don't have a higher high or a higher low. We don't have a lower high or a lower low. I hope you get me from all the simple logics I'm trying to use for you to understand. So let's go to the chart so I can show you some examples also. Let me clean this up. I'm going to look for a clear pattern for you to understand what I'm trying to talk about. A clear pattern. Let me go to the 4 hours. Go to the 4 hours. Though I'm saying types of choppy movement or a range movement, but I'm just trying to look for a clean explanation of it for you. Okay, good. This movement right here, is a range movement or a choppy movement. You can see that the highs and low are at equal level. No higher highs, no higher low. You can see from here. If I go over to the lower time frame, it will be very clear for you to see the movement. The candles are going to be much than this, so it will give you a clean or a well visible picture of it. So let me skip to the lower time frame. Sorry, let me quickly look for that again. Okay, good. Get to the 1 hour. On the 1 hour, good. This is what I'm talking about. You can see there's no higher high, there's no higher low. Same level. To identify this, you also mark the structure house. You also use your trend line to mark out the last low. Trend line to mark out the last high also. But I will advise you use a rectangle box to mark the zone out, so it will be safer for you to know if the trend is changing or not. Okay, good. You can see no higher highs, no higher lows. Let me look for some other examples for you. And always have it at the back of your mind when you want to know if a market is ranging or is choppy. They don't create higher highs and higher low. Like this movement right here is a range movement. No higher highs, no higher low. So that logic helps you to know if you are having a range market. You also mark it out with your rectangle. This was the last high, this was the last low. Let me mark that out. This was the last low, this was the last high. So we didn't have higher highs and higher lows. The three types of market direction I explained. I would love you to go on the charts and identify them by yourself for better understanding. I've come to the end of this video. So if you find this video helpful, do well to like and subscribe, turn your notification so as to be notified anytime I drop a new video. See you in the next one.